So as we were saying earlier, today we'll be looking at trend and market structure. Trend and market structure. Let me write that. Trend and market. Please can you mute yourself?
Okay.
All right, thank you. All right. But if you just want, if you want to say something, you can just unmute and go on. All right. So trend and market structure. So um, we have two main type of trend basically. Um, we have the uptrend and we have the downtrend. So let me put this here. Two types of trend. We have the uptrend and the downtrend. All right. So basically, these are the two main types of market trend. Two main type of trend. Now, most traders they always have a third type of trend, and it's common. You see it a lot in the market. So that's what we call the sideways trend. All right. So two main type of trend, but some traders they always say this. There are three types of trend. This is the third type that they call sideways trend. So we are going to see the main characteristics of these two types of trend, and we're going to jump right into market structure. All right, so let's start from uptrend. So what is an uptrend? All right, so an uptrend is characterized, an uptrend is characterized by a series of higher highs and higher lows. An uptrend is characterized by a series of higher highs and higher lows. Now, what do I mean by higher highs and higher lows? Let me give you an example. All right, let me put this here. All right, so higher highs and higher lows. Okay, so this is what I basically mean by higher high and higher lows. We have a high here, right? We can unmute though. We have a high here, right?
Sure.
We have a low. We have another high. We have a low. We have another high. We have a low. We have another high. We have a low. And we have another high. Let me stop here. So you can see the character of an uptrend. So let's start. This is higher high. This is a higher low. This low is higher than this previous low. We have another high. This high is higher than this high here. We have a new low. This low is higher than this low here. So you can see it's higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So you can see this is what we call an uptrend. When the market is making a series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So the market, the market doesn't just move straight in one direction. It must move in waves, like we talked in the previous class in key level. The market move in waves from one level to another level, from one level to another level. So the market is going to make a series of, if it's going up, it's going to make a series of higher high, higher low, higher high, higher low. All right, so let me put this here. This is an uptrend. All right. So now let's look at a downtrend. One second. All right, so let's look at example of a downtrend. All right, so let's see the characteristics of a downtrend. So a downtrend is characterized. Let me write it down. A downtrend is can you hear me?
Sure, I can hear you.
All right, a downtrend is characterized by a series of lower lows and lower highs. Okay, lower lows and lower highs. Uptrend, higher highs, higher lows. Downtrend, lower lows, lower highs. Let's look at an example. Oh, did that delete? Oh, one second. Oh, let me write it again. All right, so a downtrend consists of a series of lower lows and lower highs. All right. So let's look at an example. We have a high, right?
Sure.
We have a low. We have a high. We have a low. It goes high again. We have a low. It goes high again. We have a low. It goes high again. We have another low. All right. So higher high, higher low. Another, sorry, this is a high. This is a lower high. This is a lower low, rather. Lower low, lower high. We have a low. We have a high. This high is lower than this high, right?
Sure.
It went lower. We have a low here. We have another low. This low is lower than this low, right?
Yeah.
We have another high here. This high is lower than this high, right?
Sure.
Perfect. So this is a characteristic of a downtrend. Lower low, lower high. Another low that is lower than the previous low. Another high that is lower than the previous high. Another low that is lower than the previous low. Another high that is lower than the previous high. Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, and it goes on and on. Let me write it here. Downtrend. All right. So we've been able to establish the characteristics of a downtrend with lower with lower lows and lower highs, and we've been able to establish the characteristics of an uptrend with higher highs and higher lows. Now, this is as basic as it can get. Now, if you are able to understand your key levels, you're able to plot them, and you can identify a current trend in the market. You have taken two bold steps in taking market decisions. All right, so let's move ahead. Let's enter the chart and look for example. Let's get in. Let's get in. All right. So let's this is Solana. All right. So what trend is this?
This uptrend.
All right. Perfect. All right. So you can see market has been making higher highs, higher low, higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And now it failed to break this high. So we don't know if it's going to break. It's still dancing around. All right, so we've been able to identify an uptrend. Perfect. Let's look at other markets. Let me look the different one. Let's look at other markets. Let's look at GBP USD. All right, so what trend is this?
Is yeah, that should be an uptrend.
This is an uptrend. Perfect. So we have higher high, higher low, 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 higher high, higher low. Perfect. All right, so let's look at this part here. What trend is this part?
A downtrend.
Perfect. So let's look at it. Lower low, lower high, 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 lower low. Perfect. So you've been able to understand, you've been able to grab the two main types of a trend. All right. So now that you've been able to understand um an uptrend that arrives by a series of higher high and higher low. All right. So now that I've been able to understand um an uptrend characterized by a series of higher high and higher lows. All right. So let's look at the sideways trend. Let's look at the sideways trend. Let's look at an example from let's see okay, let's look at EuroCard. Okay, perfect. Right. All right, so this is what we call the sideways trend, basically. You can see how market is just going up and down, up and down, up and down, up and down, sideways, right?
Yeah.
Perfect. So this is what we call the sideways trend. So the sideways trend is just basically market moving between a defined or a confined support and resistance. It has a defined resistance there and it has a defined support. And price or market is moving inside that defined resistance and support. So basically, most of the time, what most traders do, although it's not advised, is when the price at the defined resistance, they sell, and when price is at the defined support, they buy. And you can see, you sold here, you've made money. You buy here, you've made money. Buy here, you've made money. You sold here, you've made money. Now, but mind you, the sideways trend doesn't last forever. It is subject to what we call a breakout for a continuation of our trend. You grab that.
Yeah.
A sideways trend doesn't last forever. It is subject to breakout, either a break to the upside or a break to the downside. Now, why it is risky to trade a sideways trend is because you might be on the rough side when it breaks out. Let's say price gets here and you sell. And instead of price to continue the sideways trend to the downside and if the support here, it breaks out and continue an upward trend. So that is why it is risky to trade a sideways trend. But still, there are still safety measures or precautions you could take to trade a sideways trend as a pro. But now, mind you, this is a weekly time frame, right?
Yeah.
So definitely, if you go lower, you can't you this sideways trend that I see here. is going to look like a full-blown trend on the 1 hour time frame. Let's go to the 1 hour time frame so you can see. So you can see that it's looking like a full-blown trend. You can see
Yeah.
this account. This is downtrend, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So you can see it's looking like a full-blown trend. So as time goes on, you are going to be equipped with skills to trade the markets, most especially whichever the condition the market may be in. As a trader, you should be able to make money. All right, so we've been able to look at the upward trend, downward trend, the uptrend, downtrend, and the sideways trend. All right, so let me draw an example here where I can see. So this is a sideways trend, something like this. The market is doing something like this. So this is an example of a sideways trend. This right here. So we've been able to identify an uptrend, sideways trend, and a downtrend. All right. So any question before we move on?
No, I'm good.
All right. Perfect. 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 So now let's look at market structure. Let's look at market structure. Let me delete these guys here. I hope you've taken these down.
Sure.
Perfect.
You still share the video, right? You still drop the video on the listen.
Sure, 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 sure. I always do it. All right. So let's do that. Structure. Let's delete that. Okay. So now we have two types of market structure. Okay. Now that you've been able to understand trend, the market is going up, it's an uptrend, market is coming down, the downtrend. Either you go long, uptrend, you buy, you go short, downtrend, you sell. All right. But one thing you should know, please, this is a rule. Never trade against trend. Note this. The trend is your friend. Now I know most of times I do trade against the trend. I'm experienced though, and I know how I risk lesser, let's say half than what I'm going to risk if I was trading with the trend. But please, it is risky to trade against the trend. It's just like a motor is moving front and let's say a motor is coming towards you and you are crossing the road. Definitely the motor is going to hit you. But if the motor is moving away and you're crossing the road, the motor can't hit you because it's moving away. That's how it is with the trend. So let's say we have a downtrend and you want to buy. Definitely the market is likely to continue selling and keep you out of the buys. That's what I mean by trading against the trend. You always want to trade in the direction of the trend. Okay. So they are trend in every time frame. All right, perfect. So now let's look at market structure. We have two main types of market structure. We have basic market structure and the advanced market structure. Now, these are the two main type of market structure. Now, we are going to focus more on the basic market structure And once you are familiar with the basic market structure, in future classes, we are going to look at the advanced market structure. All right. So now, what is the basic market structure? Now, the basic market structure is just the normal way a trend moves. Basic higher highs and higher lows with swing points. Let me write that down. Basic market structure is just a basic market trend with swing points. I'm going to teach you what swing points are. All right, so let's look at what I mean by basic market structure with swing points. Okay, and I'm going to give you assignments so that I'll be sure you understand what you brought into this class. All right, so now let's look at basic market structure with swing points. So let's use an uptrend for our example. So we have a high, we have a low. Now we have another high and we have a low. We have another high and we have a low. We have another high and we have a low. Now what do I mean by swing points? Let me show what I mean by swing points. All right, so I'm going to pull up my rectangle tool to draw swing point for you, okay? So this is a basic market structure. Our basic higher high or higher low with swing points. Now you see the market got here, it dropped, right? And as it dropped, it came back, it broke this level right here. Am I right? Hello, are you with me? Okay, so when the market got here, it rejected. When it came back, it broke this high. Now what happened next? The market came back to test that level that it broke, creating a swing point here. Now when the market retested that level, it went back up. Now this level that is rejected to come and retest this level that was rejected down here, it broke it again. Now when it broke it, the market came back to retest that level again. Now this place that was rejected, the market broke it again and came back to still retest that level. This is what we call swing points, basic market structure with swing points. Just your basic high, low, high, low, high, low, high, and low. Now we have a very clean example on the OCHF that you could do. I know you may not have seen it, but let me show you. Can you still see my screen? All right, so here it is. If you are talking, I can't hear you because you are muted. Okay, so this is what this is the example I gave you. Why is my two? Okay. All right, so this is the two minutes. Okay, so this is the basic market structure I told you. This is the downtrend though. Market rejected. Market broke it. Market came to retest it. Market broke it. Market came to retest it. And market broke it. So this is basic market structure with swing points. Now, at every swing point is an entry opportunity for you in the market. Market broke it, it went back up. It broke this level here. When it broke this level, it went back to test that area that was broken. This is an entry point for me. It came back again, broke this level that it was rejected from. When it broke this level, it went back up to retest this level that it was rejected from. To show you how basic this thing is, it's a no-brainer for real. It's a no-brainer. So let's say you knew what market structure is and you knew your basic market structure and you understand how to find swing points. So definitely when the market did this, it broke here, it came back here. Definitely you're going to want to sell this market because what? This is a sell and your first take profit will be here. So definitely by just understanding market structure, basic market structure and swing points, you've made money from it. So this is how simple as it gets, but people try to make it complicated. But I do my best to make it as simple as possible. All right. I don't know if there are any questions. All right. Um, so basically that's that on the basic market structure. I don't want to waste much time. We'll be rounding up soon. So this is as simple as it goes. Same thing like a downtrend with just on hot CHF. We have a low, we have a high. 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 All right. So basically, swing levels. As simple as it gets. Can't sound any simpler. Swing levels, swing levels, swing levels. And every swing level is an entry opportunity in the market. All right, guys. That's that for today's class. That's that on basic market structure and the trend. So far, we've been able to round up on uptrend and downtrend, and we've been able to understand the basic market structure with swing points. And in future classes, we are going to learn more about the advanced market structure, but you need to understand the basic market structure first and other concepts before you move on to the advanced market structure. So assignments, there will always be assignments. Assignment for this new week is to identify basic market structure on any three pairs of your choice, CHYCE, and what trend is the USDJPY currently on. So this is the assignment. All right, so these are assignments, and I expect submission as usual before Wednesday of next week. All right, guys. So that will be all for today's class. Have fun, and we'll see you in the next class. All right. Good night, guys.
No, thank you.
All right.